We are living in a ecosystem today where we are getting increasingly used to on-demand services. Procurement of goods and services on demand has almost become second nature to us. In such a situation, expecting money movement to still take a matter of few days seems quite arcane and archaic at this point of time. Customers are expecting money movement to happen seamlessly, almost real time. They expect choices on how they pay, when they pay, where they pay, right? Whether it is business to business, business to people, people to business, or people to people, right? These are choices that customers are expecting. So in that setup, also there is the matter of high fees which customers are unwilling to bear at this point of time, right? In that situation, customers expect that payments happen real time, in a real fashion, right? And if I were a bank today, I would be quite worried if I were a large bank wherein I'm losing customers. There are fintech startups coming up, there are other companies starting up, almost taking shape overnight and competing with the real biggies, right? So as a large bank, I would be really worried if I don't address the basic hygiene problem of real-time payments, right? So that's where the faster payments as a concept kicks in, right? Faster payments by definition is basically what it says it is. Faster payments, real-time payments, and it is good that banks are coming together as a consortium along with the regulatory bodies and trying to build fresh new infrastructure to handle payments on a real-time basis using new messaging standards like the ISO 20022 standard, wherein not just fund transfer happens real time, but a lot of other information can also get passed through in real time between parties. And so that's what the faster payment system is all about. Some geographies like the UK and Singapore have already accomplished it. Then there are countries like Australia planning a new payment system, in the process of conceptualizing and rolling out a roadmap. Then there are countries like US that have formed a payments task force and getting ready to roll out such a new payments infrastructure. So what does it mean to banks? Right? What it means to banks is it brings in a certain basic hygiene in the whole ecosystem around real-time payments. So we have to cater to that hygiene, and on top of it, banks get an opportunity to start creating some very innovative business models and use cases around payments wherein they can also start differentiating themselves. So there is a collaboration aspect where you have to come together as an industry, as an ecosystem, and then there is a competitive aspect as well wherein you can differentiate yourself on some of these innovative offerings. Say for example, on such an infrastructure you can actually go ahead and build a way to do multi-channel commerce, or a way to do peer-to-peer transfers, or a way to do social payments using the basic faster payments infrastructure.